From CommSec is Tom Piotrowski. Tom, how were the markets overnight?
Well, there was quite a deal of euphoria in the last couple of hours in particular, Danica. The US Federal Reserve Chairman released a text of a speech that he's going to make, and within it he spoke about the possibility of the US Federal Reserve moderating their pace of rate hikes. And the markets had been hoping for something like this with mixed success over the course of the last couple of weeks. There have been a number of other Fed officials who have been very hawkish in their commentary. So the markets have been volatile in their response to this sort of thinking. But today, the fact that the Fed chairman said this has seen the Dow up 1.3%, the S&P 500 up 2.25%, the Nasdaq up by 3.2%. Additionally, we had some figures on inflation out of Europe, which highlighted for the second day that price increases were moderating as far as the last month is concerned. So that dovetails into that narrative that we have seen on a range of fronts. Just yesterday, we saw the moderation in our own rate of inflation. So this has seen long-term interest rates globally fall over the course of the last couple of days. In the US, down by around 5 basis points for 2- and 10-year government bonds. That's a pretty decent move lower in yield terms, higher in price, of course. European markets were firmer, but not to the same extent that we've seen in Europe. The FTSE up by around 0.8%, French market up 1%, the German DAX up by 0.25%. Still got a really important outcome in the next day, Danica, with some inflation figures out of the US, and that will sort of allow the markets to either consolidate or be challenged by the economic news. So it'll be an interesting end to the week.
Okay, Tom, thank you.